I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All trades placed by me are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is unchanged. Oh man, all right. I guess first quick look at some of these companies that are coming out here with earnings. We got Coinbase just came out. Does not look good. Looks like they're missing across the board here. Earnings, revenue. Yeah, not surprised to see it. Coin's numbers look pretty bad. Square though, we got Square up here, solid after hours, up 13% after hours. They crushed their EPS, beat on rev, not seeing guidance. DoorDash is up. Interesting. That's a huge range on the guidance on adjusted EBITDA. Which I guess that's in line. Gross order value is up, but I feel like how much of that gross order value is up? How much of that is because of inflation on food pricing? Anyway, DoorDash definitely not one I really have an interest in. Twilio getting smoked. Yeah, so we got a mixed bag here. Square up, Dash up, Coin down, Twilio down. Yeah, Coin is so trash. It's been a trash company. I was too bad I'm not still short from the IPO day. Amgen out. Looks like it's trading up a little bit. And yeah, PayPal's the other fintech we got coming here. All right, let's do it. So we're left with an interesting little doji here on the SPYs. You know, we didn't break down further, which was kind of my expectation coming into today's trading session, just based on the data. That short-term tactical sentiment that we had discussed was cooked to the downside because of how large our gap down was. You can see here, going off of Pat's note this morning, I do love looking at this as to help me with strategy in the morning. Closed just above the green zone, but with the gap down, that would definitely have that down there in the green zone. So a little bit cooked there. I thought it was going to be difficult for the market to give a lot of further downside follow through because of that, at least in the beginning of the day. I was a little bit concerned with the consolidation midday, that was enough to satisfy that and then have us roll back down. I'm going to go ahead and assume that the short-term tactical is not going to be in the green zone in tomorrow's trading session, because we basically spent the entire day for the SPYs here kind of going sideways and digesting the down move, which is bearish. Definitely bearish. The longer we spend down here, you can see this ADMA beginning to curl. Those moving averages are going to close soon. The longer we spend down here, the more bearish it becomes, because we begin to satisfy some of the oversold conditions. And again, not majorly oversold. You know, it's a big move from 390 down to 370 here on the SPYs, but we're not too far away from our equilibrium area. It's just that short-term tactical into the green zone with the gap down this morning does tend to make opening downside follow-through difficult. And again, that is what we saw here off the open. A little bit of a sloppy open. We broke down. We got really extended to the downside. We called this bounce in the market at lows like pretty well. This is also when I think it was the ISM number came out at 10 o'clock. That helped this market to get a boost on a little bit of volume. We broke opening highs. Basically had a 15-minute correction, a reversal on the 5-minute chart, a 15-minute correction, and then pretty much just went sideways the entire rest of the day. I actually think that if you are bullish, this is not what you want. And if you're bearish, this is exactly what you want. I think if you're bearish, you don't want this price action to just continue straight down like we're seeing in some of the FANG names, because it usually can't last. And I'm going to talk about those FANG names in a second, because the degree of selling that we're seeing in those stocks is almost unprecedented, especially with the market not being at lows. The amount of money that's coming out of them, considering their market cap, is mind-blowing. Because usually, again, if you're bearish and it's extended to the downside and you get further extension to the downside, that'll pay you that type of momentum, but that type of momentum usually can't last and is part of potentially a process that can lead to a bottom, which is one of the things I'm actually looking for in these FANG names, but it's been brutal to look for it. So that is our SPYs there. Do the Qs give us a different picture? The Qs are trash, weighed down by those FANG stocks, pretty much closing at lows. 260 was a support level that we had communicated during the trading session today. I think Mark was short and called out that 260 low pretty much perfectly as his target. So great job there. That support held in conjunction again with the ISM number, and just an extreme amount of extension on a 5-minute chart by the time that low was coming in. Led to a 5-minute correction. That 5-minute correction became a 5-minute reversal, which also basically just corresponded to a 15-minute correction, and then we, same thing, digested all day, and then we were really, really weak into the close. PayPal's out. Oof, PayPal getting smoked. PayPal getting smoked as Square was up.
All right.
Oof, that's pretty crazy. Anyway, I'm going to go back over to the meeting here. Let's take a look at the IWM. Now, IWM's still best. There's a little bit of hope here when you look at the IWM. IWM trying to create the pivot where it needs to pivot. Still holding some key support levels. Held 174 really well today, which is kind of getting down into an important area. The story here of the selling, when you're looking at the Qs versus the SPYs versus the IWM, it comes down to your mega cap stocks, and we got to talk about them. So, we had a decent game plan coming into today's trading session as far as stocks to watch. And as long as you didn't focus on the first part of the game plan, which was entirely my focus today, which was, looking for some sort of... I presented two ideas for long trades in FANG names, and you can look at whichever one you want. That was either the RDR situation, which is basically where you trade through on it has to be a day 3 or a day 4. Today's day 3, where you trade through the day 2, in this case low, and then trade back through it, and you go long through the previous day's low. You go long through the previous day's low versus the low that we have had thus far. That was one potential thought process for these names. The other thought process that I threw out there in the morning meeting today, which at the time to me almost sounded like a pretty far out call, now in hindsight is looking a lot more realistic. I said to you guys the idea of capitulation in the market. Everyone had been talking about back here in June when the market was making its lows, like everybody and their mother on CNBC, everywhere you would look. People were talking about the only way that the market can bottom is capitulation. As a matter of fact, I don't even think that half the people on CNBC who are saying that the only way that the market can bottom is through capitulation even actually know what capitulation in the markets actually are, because it is a very technical term as far as selling coming in, maximizing volume, and that is the spot where buyers take control from sellers on that maximal volume as the final, weak hands, if you will, throw in the towel, and the real value people, the smart hands, whatever it is, come in and recognize the value at that price and start to buy the market back up. And back in June, everyone was saying coming into that, we have to have capitulation. We have to have capitulation and selling with it, the market can go higher. And I was saying at the time that that's not true. Not only do we not have to have capitulation, but there's a good chance that we won't, because everybody and their mother is looking for it. And we really didn't. There was a little bit of capitulation for like an hour on a day that wasn't even the low, when Snap had that big gap down and they took down, the first big gap down on Snap on this date back here on like May 24th. They were taking down like Google and Facebook and everybody else with it at that point. But outside of that, the thing about this market, this bear market that we have been experiencing this entire calendar year, is for the most part, even though the liquidity has been low, the ranges have been massive, the volatility has been high with consistency, there really has been no panic, no real signs of traditional capitulation, even in like, I remember this insane 3-day down move here, which was like, and I think like day 1 here was anticipation of CPI, day 2 was the CPI, day 3 was the Fed, and it was like back-to-back CPI Fed. Even there, with the volume picking up a little bit on that 3rd day, there was no real like capitulation. So the market hasn't seen that. And in my trading career as a professional, which spans 12, 14 years, whatever at this point, really 12 years as like a technical day swing trader, with T3. I've really only seen like true capitulation come in a few times ever in the market over the course of my career, and I struggled to point. I remember there was that one time in Facebook, and I wish Facebook, that my charts all messed up in Facebook since that split, which is super annoying, or since they changed the symbol and split or whatever happened there. So I feel like if I really had the historical chart, I might be able to find it, because I remember it vividly. But there's really just been a few times over the course of my career where I've seen like true capitulation coming in market wide. Sometimes you'll see it in individual stocks when there's a news event that occurred in that individual stock and it's getting absolutely destroyed or whatever. But like a market-wide capitulatory event, it is very rare. And again, I think I've only ever seen it a few times over the course of my entire trading career. With that said, most of my trading career does span a pretty much a massive 12-year bull market, with a couple serious corrections in there, a couple 19% corrections in the S&P that were never classified as bear markets, because I think one of them was 19.5% from closing high to closing low, so you're not including the absolute high and the absolute low, and 19.5% is not a bear market, but 20% is a bear market. So really kind of messing with definitions there. So I definitely have seen some pullbacks, but this is probably the more brutal bear market I've ever seen over the course of my career, including COVID. COVID in some ways was much worse, as far as like the selling and the speed and how everything went, but it was also so fast. It was basically just like a month or so, a couple months there, and it was here and it was gone, and our bottom was in, and the Fed pivoted, and we worked our way back up, and I remember that last day at the low there on that March day. This was just such an obvious day to keep a lot of long swings overnight, which I was buying stuff into the close that day, which I don't normally do, and we were able to capture a lot of this move back up. This bear market here, it's just been exhausting. The amount of time has kind of gone by, I should say, that we have had to deal with these massive upside swings and downside swings, but still no capitulation. But I'm starting to look at these FANG stocks right now, and I'm starting to see something I don't know if I've ever really seen before, which is the way these FANG stocks are selling. And look how far the SPY is still off of its lows, though. If you if you told me whatever when we were making this low, that hey Derrick, in half a month from now the market is going to be significantly off its highs. I don't know what this is on a percentage basis, but significantly off its highs. But every FANG name is going to be like the most extended you've ever seen it without the market participating in that. I may have even thought it's not possible. Yet here we are. That's exactly what's happening. Obviously Apple being the biggest is still not even quite at its lows. But my God, this day in Apple on no new news, at least that I'm aware of. And Apple certainly got hit these last couple of days by some of that Foxconn news, which now they're saying is only going to be 7 days. Apple down 4.2% today. I mean, these FANG names, It's really incredible, these daily charts. This Google daily chart, to see 3 Maribozus like that in a row of just pure selling, no buyers to be found. Note the volume that's increasing here on the way down. This earnings report, I did not think the earnings report in Google was good, but okay, fine. The report's not good. The gap is down from 105 to 96, back to where we were trading here. This price action makes sense to me. The degree of this 3 days of selling here is genuinely mind-blowing. Microsoft, I actually thought that the Microsoft report was fine. It wasn't good, but it didn't seem to be as bad as Google, or it didn't seem to be a disaster. What is it, FANG name? FANG stands for Facebook, Apple, Netflix, Google. But really, it's just an acronym at this point, with Facebook changing its name. The Four Horsemen, I think that Scott Galloway termed that. Really, at this point, FANG, I think, is just a broad acronym for mega cap stocks. That's how I think about it now. So you can throw Microsoft in there. Maybe you can argue that Netflix is out of there. Now it's the Three Stooges. I love that. Maybe you could throw Nvidia in there a little bit. I was trying to make an argument for a little while that we should be taking Netflix out and putting Nvidia in. But generally, Facebook, Apple, Netflix, Google, but you got to be thinking Tesla. You got to be thinking Microsoft also, especially Microsoft, when you're thinking about mega cap tech. From Bill K right there. That's your list. I didn't think that Microsoft earnings report was like a disaster. I still think this is like the best company in the world. The degree of selling here over the course of these last 3 days is mind-numbing. It's insane. And the volume here, now that I'm looking at this with the market closed, it's not even a pickup. This is selling like this on average volume. I almost don't even understand how it's possible. Let's take a look at Amazon. Yeah, Amazon's had elevated volume for these 3 days, but it's not maximizing. You want to be seeing, if you're looking for capitulation, like seriously maximizing volume in these names here, and I'm not seeing it. Apple, this just looks like normal volume into the sell-off. So I don't know. Maybe that takes my capitulation argument and gets rid of, turns it upside down. I'm just blown away by. I would love to know the cumulative market cap that has come out of these stocks over the course of the last 3 trading sessions. And it's while the SPY still looks like, obviously the SPY's gotten hit really hard the last 3 days, but the SPY is nowhere near its lows at this point. And you consider, the percentage that like Apple and Amazon as a combination is of the SPY, and I don't know the number off the course of my head. In the Qs, it's like 19% or something, but it's still a large percentage for Apple as well. I mean, for the SPYs as well. For the SPYs to be holding up the way they are and these stocks looking like this, I don't know. It's just mind-blowing. I really don't think I've ever seen anything like it. I don't think it can last. I genuinely don't think that the degree of selling here can last. But I'll tell you what else, it can last for more than I expect it can. Especially as I'm looking at the lack of volume pickup. If that volume was really picking up, like at least with Google, it's picking up here and it's like elevated volume compared to normal. But you look at Microsoft and it's normal. You look at Apple and it's normal. You look at Amazon and it's elevated, but it's not increasing. Meta's the other one. It's like, little increase in volume here since the report, but it's also a more expensive stock since the report. This is really wild stuff. So I don't think that the degree of selling here can last, but if I'm looking for some sort of capitulation to come in these names, because I've never seen them trade like this, I would want to be seeing that volume really maximize, and I'm not really seeing it, and that's a little bit of a concern, which it is possible. On the one hand, I'm saying that this can't last. I'm going to stand by that statement. But on the other hand, I'm going to say it could last for another day or two if it really wants to. People are taking money. Jerry's saying Apple, Microsoft, Amazon, Tesla, Google is 20% of the SPY. people are these stocks have just been where people have held their cash for such a long time. We had this low interest rate environment. People didn't want to have bonds. They didn't, they couldn't get a return on interest rates pretty much anywhere. And these stocks were viewed as basically safety stocks because of the line of business that they're in and how massive that they've become. And they've got buybacks and they've got dividends for most of them at this point. So there's just been a lot of cash, I think, that's just been parked into these stocks. And we're looking at a feedback cycle here, I think, of people who are raising that cash maybe to put in other places, which, some of that maybe is energy. I don't think it's all energy, but also maybe to begin to rotate into some of these bonds. Like, we had Jeffrey Gundlach come out and say that he thinks bonds are a good buy, at these spots. And a lot of that money is probably coming out of these FANG names. But the degree of the selling here, again, I really don't think that this degree of selling can last. I believe in these companies, which, I can believe in them I can believe in Amazon at 90, and I can believe in Amazon at 60. But for me, that's important. I don't know what's going on, if they got that buyback turned on or not, or if that's just feeding the selling. But I don't think that this degree of selling can last. But you need to have a signal. That's the biggest thing. And there were some okay spots. Amazon tried to be strong off the open, along with eBay as a secondary play. That Shopify was a great kind of opening trade that I was able to be in, even though it kind of broke lows here because of the market. That was one that we were looking at also. Again, we had a lot of really good trades here. It's just that the ones that I focused on most were not the good ones. I was very, very focused on these FANG stocks today, and even though I was able to be involved in Shopify a little bit, and we had call outs in COP, and we had call outs in RIG, and AMD is a really good early trade. That AMD move was incredible. The NVIDIA trade was solid. We called out NVIDIA versus the low that became the low of the day. There were a lot of really good trades out there. I'll just be honest with you guys. Even though I made money in a couple of names today, that was okay. I just was very focused on these FANG stocks, and I definitely got hurt a little bit in them. Again, even if I kind of was able to pick my spot in them pretty well, I thought that Pat like basically called what looked like could have been the low at noon. This was a real low that came in pretty much at noon for Apple. For Google, staged a really big bounce off of that. Amazon staged a really big bounce off that. That was like excellent timing from Pat on that. And yet some of these names, not Amazon, but Google for sure, still managed to roll over and kind of close on lows. Meta didn't, Amazon didn't, but Apple sure did, Google sure did, and Microsoft sure did. I'm going to be continuing to focus on these tomorrow. I can already just tell you that. I'm in them. It's a trade for me. I'm out of the money in them at this point. I'm doing some of the things that I preach not to do. Again, you guys know I always keep it honest with you, right? I'm doing some of the things right now in some of these stocks that I preach to traders not to do. For the moment, I can afford it, but if it gets too bad here, then I have to make sure I'm managing my risk also. And the biggest thing is always position sizing, and luckily I haven't jumped the gun on the position sizing to be too I could be significantly heavier than I am. Just looking at my own work here. It's like on the one hand, I could be significantly heavier than I probably am in these. On the other hand, I probably could be a little bit lighter than I am in these. Like I'm doing enough. I'm heavy enough here where I'm feeling this, and I'm doing what I preach not to do. But I'm not so heavy that I'm putting myself into like serious harm's way. And I will still look to be able to execute these properly on a signal, which maybe is a day 4 signal. You know, we'll see how we gap tomorrow. I'm gonna be looking at the same thing tomorrow as I was today. It's just gonna be on even greater extension for these FANG names. I'm gonna be looking for an RDR tomorrow. I'm gonna be looking for capitulation tomorrow. I'm gonna be looking for something like that where I can really hang my hat on some actual real size in these things and average down, honestly. And if I get real size, and then I'm gonna have to put some stops in, and then you know, try to trade my way out of them with an appropriate signal. But yeah, for the moment, I mean, these 3-day moves here for these FANG stocks is a little bit unprecedented, and it's definitely caught me a little bit off guard. Trying to think if I got really anything else to talk about outside of how my mind is blown by the degree of selling in some of these names here. And I think I basically covered it. I mean, again, you know, some other really good trades that were out there, which, you know, I just mentioned really briefly. So still a really good job on the team. COP, right? That was another one. Some really good stuff that was out there today. And I hope traders were more focused on the stuff that we communicated. That, oh, not to mention, and I didn't capture it at all, but it's written in the notes here. I thought that Roku and Peloton were worth watching off of opening lows or off of pre-market lows for bounces. The Roku numbers were a disaster. I expected it to kind of go down on that, and then I expected it to get bought back up because I don't think that the stock belongs at $40-something. Somebody's going to buy it out. And they were able to buy that all the way back. I mean, that was a sick move from that Roku off that lows. I know one of you guys was communicating this setup in here as a trade to the long side, and that was a really, really good trade, whoever called that out. So, again, there was a lot of opportunity. We called out a lot of really good stuff. I, for the most part, wasn't involved in it. I, for the most part, was having my mind blown by the degree of selling in these FANG names and, you know, kind of fighting them a little bit and, you know, losing money on difficult, stressful situations when I probably could have been making money on some easier, less stressful situations that we called out. But, you know, like you guys know, if you've been with the team here for a while, I communicate everything I do as best as I possibly can, right? And I got no problem saying when I'm taking a hit. I got no problem saying when I'm doing a good job. I got no problem saying when my focus was off. I got no problem saying when, you know, we as a team call things out perfectly. So that's all I got for you guys for today's meeting. Questions? No problem, Kevin. Scrolling up here in the VTF to see what, if anything, I've missed. A lot of earnings news and earnings chatter. I think I'm seeing here from something from Chinggis. Rig off the open through $3.80. Yep. Yeah, they made this difficult because you really had to pay up. I think someone communicated it early. It might have been Matt versus this low. So you could have tried to jump the gun on this rig a little bit and get stock early versus the low because it was communicated. The 380 is the daily level for sure. 380 is the daily level that we talked about in the morning meeting. If you just use the ignition bar low on this rig, you got your risk covered and then got shaken out of the trade whatever happened with this crazy volume bar that came in, and then it actually went. If you were giving it to lows, or you bought early and giving it to lows, you bought 380 and you're giving it to lows instead of the ignition bar low, then you caught the entire move. I could tell you for myself, if I was involved, I would have probably bought through 380. I probably would have used the low of the second 5-minute bar. I would have covered enough to get my risk covered, and I probably would have gotten shaken out at the 10-15 bar. But there was a few ways to be able to trade that. Let me read the rest of your question. Trade down, the only logical stop at that point was the day low. So fine, yeah, the day low. That's what I was just saying. But I don't think that's the only logical stop. The candle in which a breakout occurs is an ignition bar. An ignition bar low that's confirmed by volume, which this was, is always an appropriate stop. So you could have used either the opening low or the second bar low as your stop loss. Reading the rest of your question, you think buying through 380 versus lows is too much risk for a $3 stock? I can't disagree with that. Then you saw an inside candle at 950. Okay. So you bought the break of that. And it was holding above the breakout level. That's a good thing. So you bought that. You put the stop in. You probably got pushed out here. I hope you got your risk covered, but you may not have. I'm fine with your thought process on the trade. The only thing I would say is that, and you still would have gotten shaken out of it, I think you could use the second bar low as your stop, and have bought through 380 with that second bar low as your stop. And then in that case, you would have just had 6 cents worth of risk. I like that a little bit better, taking the actual breakout than taking your trade. I don't like these super cheap names, and I tend to avoid trading stocks that are less than $5. You get a lot of these types of candles here where it just gets stuck in like a 1 cent spread, and it could be easy to call things inside bars when it's really just that it's such a cheap stock that the stock can't move because it can only move in penny increments. So I think that can throw you off a little bit when you're trying to study this and call this an inside 5, which, you know, technically it is an inside 5, but the pennies are so tight that if it was a little bit of a wider, more expensive stock that could be a little bit looser, you might be looking at tails here and not have that set up in the same way, or have a little bit of a different setup, if that makes any sense. But I think that technically your thought process is correct. If you didn't take the trade that I'm talking about, you're loving that it's holding above 380. This is a higher low. It's one of the continuation setups that I like is the inside and up off of equilibrium. You took it and you got pushed out on whatever this wild downtick was in the volume. So I like the thought process there, Chinggis, for sure. Scrolling through. Square is the Cash App, which is a lot more popular than Venmo. That's interesting because I don't know anyone who has ever used the Cash App, but everyone I know uses Venmo. Maybe I just have a little insulated circle, and that includes myself. I've never utilized or downloaded the Cash App. I use Venmo multiple times a month. I think it's like the coolest, easiest thing ever. Like back in the day of having to, back in the day, maybe some of you young guys don't know what it's like to carry around cash. It's funny. I was at a bar one day recently, and I ordered a drink, and I paid for it in cash, and it was one of these, kind of cool bars in the East Village, and the bartender looked at me, young woman, and like gave me a weird look almost that I gave her cash. I was like, oh, cash, like, okay, like what do I do with this? But there was a time before Venmo when, if you went out to dinner with a bunch of people and you're all splitting it and you weren't getting separate checks or whatever, everybody would have to have their cash, and you're doing the math and you're figuring it all out. Now, who's got the right amount of change, who needs change. Now it's just, hey guys, I'll take care of the bill. Here's my Venmo, just Venmo me your part. But again, maybe I'm just in a little insulated world here in, New York City or whatever, where people use Venmo and not the Cash App to the same degree. But yeah, I'm interesting to see that where are these things now? Square up 10% and PayPal down 10%. Really interesting. Really interesting. Is coin squeezing up a little bit? That's interesting also. Such a garbage company. From Rex. Today I know a lot of people took the AMD long. Yeah, it was great call outs in AMD and NVIDIA today. But I couldn't find an entry for myself. Would you mind talking about how you would trade AMD? Yeah, so I didn't look at AMD as hard as I was looking at NVIDIA. So I feel like NVIDIA, I could answer that one better because I didn't call out personally any buys in AMD. Some of you guys did. I think Rock was calling out a solid buy in AMD. I called out a buy in NVIDIA off of this low. Why did I call that out? It had something to do with the extension, and it had something to do with AMD's strength. That's why I was looking at NVIDIA. So remember, whenever we're looking at any of our... Yes, Bill, it does. I like that. Whenever we are looking at any individual stock, we never want to look at it in a vacuum. We want to be looking at it compared to the market. We want to be looking at it compared to similar stocks. So if I'm ever looking at NVIDIA, I'm looking at AMD as just an example. And then to a secondary degree, I'm also looking at a Micron and an AMAT, and maybe even an Intel. But obviously, Intel and AMD, they're different companies, different multiples, kind of with what they're doing there. So for me, for NVIDIA, I'm looking at the extension here on NVIDIA coupled with the extension in the market, which, we were breaking lows, but I didn't think could last. but I'm seeing relative strength, and I'm seeing a ton of relative strength in AMD. So my NVIDIA call out was just basically off the low here. It almost shook out. There was a time when today I called out a whole bunch of potential longs, and they were all like kind of similar situations. I was looking for relative strength and pivot points with a market that I felt was extended to the downside and was going to have to give some sort of oversold bounce. So if the market can give its oversold bounce, the relatively strong stocks could go, and it could be long versus that pivot. That was the thought process with NVIDIA. That was the thought process with my XBI call out, which was another actual great call out off of the 955 low. That was my thought process with the one that didn't work. Shop off of this low here at 945. The market pushed that one out. But Chop was very strong off the open, went green early, tried to create this higher low. Market caused that one to kind of fail, but then eventually you could just see that that strength was really there with this, pretty amazing move up to $35. So that's what I was looking at. And AMD obviously had the strength. I think Rock was all over that one. And then that was my thought process with my NVIDIA call. Looking for things I felt were relatively strong because I'm thinking that the market is due for a downside extension pivot. And I want to see what's setting up and what acted well. And another thing here was just how NVIDIA and probably AMD worked on that first 5-minute bar to rush up and kind of fill that gap a little bit. Compare that to the Qs or the SPYs on kind of their first bar, which was a little bit more of a struggle and was nowhere near filling its gap. But look at how far off the SPYs are in the first 5-minute bar from filling the gap versus AMD, which totally filled the gap. So the first thought process is stock selection, right? What do I want to be looking for that buy if the market can kind of give the bounce? The second thought process is actually having the trade execution, right? Because you can be having this list of stocks that I'm kind of discussing right now, but if the trade setup isn't there, you can't buy it. That's where the execution comes from. And relative strength in and of itself is not a trade, right? Relative strength is not a trade. Relative strength is a layer of probability. It's a thing that you're paying attention to get more bang for your buck on longs if the market's actually potentially going to go up. So that puts AMD on the radar. Now, as far as an actual trade setup goes for AMD, you could have gone long off this inside 5 here, perhaps, on the second bar. The break of the inside 5 versus the low of the inside 5. Honestly, at that point, I'd probably just use the low of the day. So you could have taken that and had that work out. You could have noted the relative strength potentially at 945 like I'm talking about, where everything at that point, you can again look at the market is breaking lows and this isn't, and try to trade here on this bar versus the low. That's a tougher trade, to be honest. That's a tougher trade. I think that the inside, I like teaching the inside 5 setup and the ignition bar setup because they're especially if I'm working with an entry-level type trader, they're just much easier to understand conceptually than relative strength long off the low type of trade off of this 945 bar, understanding where the market is. That's a lot more behind it that you have to be able to put together. I prefer again just teaching those dummy trades, and just because they're dummy trades and easier trades doesn't mean that you can't make a living off of them. You absolutely can, especially if you're combining it with the other layers of probability that we're talking about. So yeah, that would probably be it for AMD, and then it kind of went. I mean, maybe this higher low here that came in at 10 a.m. when the market actually made its low of the day could have been another spot to try to go long versus. Then there's nothing. Then there's nothing here the whole rest of the way up that I don't see that you could have tried to trade. So not the cleanest chart from an execution perspective, and sometimes it works that way. Sometimes and we are able to pull a couple of trades out of this AMD, but sometimes you find everything that you're looking for, right? The relative strength like I'm talking about, I'm expecting the market to pivot in my favor, blah blah blah, and you look at the chart and there is absolutely no execution, and then you just don't take the trade, and that's fine. But here I think while it wasn't easy, there were a couple spots. So I hope that helps, Rex. From Viva, where can I find a recording of the afternoon meeting? So I live stream the afternoon meetings onto my YouTube channel. which anyone who is not subscribed to my YouTube channel, I would really, really appreciate if you would subscribe to it, because I'm trying to build that up a little bit. And here is the link. So the afternoon meetings, after they're recorded, first they get live streamed onto YouTube, and then you can watch it after the fact if you miss it. The idea here of me doing that is I am sharing the learning with people. But if you want to have the ideas, if you want to have the morning meeting and the trade ideas, and to be part of the conversation as we're talking about the execution, have access to Pat's research, have access to the news and the large order option flow and all that, then you have to be a member of our team in one form or another. So yeah, I hope that helps. For Mike here, Pat had a note in his morning note about the elevated equity. I read that equity put call ratio today. Was just wondering how you factor something like that into the layers of probability. So we want to pay attention to extremes in both positioning and sentiment. So when positioning becomes extreme, and there's a number of ways you can potentially look at that, including looking at like a put call ratio. When positioning becomes extreme, a lot of times the market dynamics are coming into play that can really set you up for a move on the other side. When everybody is positioned for a market to go down, it actually becomes difficult for that market to go down, because everyone who is looking to sell in order for that market to go down has already sold. So where is the selling really going to come from in order to bring that market down? Well, it comes from longs, but then you got to pay attention to also, what does the long positioning look like? So we're in an interesting environment right now where, some of the market dynamic information, some of the VIX information. I know Pat kept saying today, correctly so, like, I just don't know if this market's really going to be able to continue this sell-off with kind of where the VIX is at. But then, of course, we look at these FANG stocks and trying to wrap your head around all that right now can make your brain explode a little bit. Pat's got the calm, soothing voice. That's not me. Pat comes on the radio, and I think everybody can just like take a deep breath and feel a little stress roll off their shoulders, because he's got that nice, calm, relaxed voice at all times. Maybe too relaxed sometimes. That's not my role. He's the yin to my yang a little bit. If I'm all over the place, I'm the hype man. I got the shaky leg syndrome going on. I'm wiling out. And then Pat, guys, everybody relax. This is the data. So yeah, I hope that helps, Mike. Yeah, so it sounds like a lot of people just saying Venmo. PayPal redid it, right? Well, PayPal owns Venmo. I assume you know that. I understand what you're saying about the ignition bar, but in general, what is the technical definition of an ignition bar? Sure. So, and Pam, I think you should have access to my training program classes. And so in the first class there, I really get into this over the course of like an hour, so I'd recommend checking that out. But basically, an ignition bar is the candle in which a breakout occurs. It could be a 5-minute bar, it could be a 15-minute bar, and whenever I'm talking about breakouts, I'm always talking about daily chart breakouts. So the ignition bar is the candle in which a daily chart breakout is occurring, and we trade off of that. They're characterized by high relative volume, and that's what makes them important. That high volume that comes in on that candle means that a lot of people basically just bought the stock or just sold the stock. So if the ignition bar ever gets negated, like just going back to rig, and rig's a little tricky to read because the first bar and the last bar of the day always have unusually elevated volume, and on top of that it was earnings. But the second 5-minute bar here on rig is massive volume. It's the biggest 5-minute bar that I can see outside of like a couple opening and closing bars, and we just described why that volume is always elevated there. So we know we have a massive amount of volume that's going off on this 935 candle as it's breaking through $3.80, which is the resistance level. So that is what makes it an ignition bar. And what it means is if the low here is ever breached, which something crazy happened here and I wasn't watching it, so it was breached super quickly. But generally, if this low is ever breached, it means that every single person who just bought on this candle is out of the money. And there's a lot of people that bought on that candle. So you have a lot of people now, and how do you know? Because of the volume. You have a lot of people that are out of the money. So typically if an ignition bar low breaks, it means that you don't want to be in the position anymore, because all of those people who are long the stock can begin to puke out that stock, and it leads to a negative, technically negative feedback cycle is the wrong term to use, but it's technically a positive feedback cycle of selling. But it just leads to a feedback cycle of selling leading to more selling oftentimes. Now, again, I wasn't watching rig here at 10:15. Maybe somebody was who could tell me more information. This almost looks to me like some massive player did a huge market sell that just brought it right below that ignition bar low and immediately snapped back above. So maybe it triggered a few stops here, but wasn't below it for long enough to really kind of set off that feedback cycle of selling. But again, that's what ignition bar is. It's the candle in which a breakout occurs, and it needs to be characterized by high relative volume. Okay, looks like I got through all the questions. So unless anybody has anything else, it's 5 o'clock in New York, and I will wrap things up for the day. All right, have a great night, everybody. I will see you all tomorrow. We'll see how this market gaps. It's a crazy saga right now from an intellectual perspective, if not also a trading perspective. And I'm curious. I'm curious to see how this all ends up playing out over the course of the month of November here, with everything that's going on, and with the capitulation or lack thereof, I guess, the sell-offs in these FANG stocks. So see everybody tomorrow. We'll assess the gap. Have a great night.